Hey, what's up, my friends? So I kind of figured that you guys really like that line, so that line will be with me for a long time. All right. So hope all is well on your side. And in this week's market analysis, I want to talk about another market, right? So last week we talked about soybean, right? We talked about that it's in a accumulation phase, and this week I'm going to talk about this market, which is in the distribution phase. So distribution is just basically the opposite of accumulation. So I want to share with you this market, which is in a distribution phase, and if it does break out, right, could really see quite a big move to follow. And on top of it, right, I want to share with you that is something which is pretty important, right? Something that is not talked about often, and it's actually called mental capital. So what is mental capital? So mental capital is basically another form of expense on you on a trader besides the money you're risking, the time and effort you're risking. There's another aspect called mental capital, and I want to go a little bit into it because it is an aspect which I find that is way too neglected, that could actually impact your trading performance by a huge margin. Right? So all this and more in this week's market analysis. I'll see you there. Okie dokie. So the market that I want to talk about is actually none other than the Swedish krona. So you can look at it, right? You zoom out a little bit and you look at this market. What has the price action been? If you look at it, you can see that over, I would say, 2013, 2014, it has been in a very nice uptrend, respecting the 2050 period moving average. And then, as when most trend comes to an end, it doesn't really, reverse on a dime. Sure it does, right? I mean, there are certain scenarios where the market just reverses on a dime, but I would say more often than not, what the market does is that it enters into a period of consolidation before, showing signs of crack and then going reverse in the opposite direction. So this is basically what you're seeing right now in the Swedish krona. You see that it's entering this consolidation over here, right? This is the lows and this is the highs, resistance and support. So what is really interesting is that it is already approaching the lows of the support. Okay, so I'm excited about this because if you think about this, if this distribution play out successfully and it does break, we could see a move back all the way back down to $7 and below. So this is a potentially huge move in the market. So here's how I look to trade it, right? Given the fact that, it is in a potential distribution phase, after that, after the fact that it has been, in an uptrend over the last 2 years, right? This could be a move that would really play out. So I'm looking to short this market if price can break below this low over here, right? If it can break below this low, I'll be looking to short the Swedish krona. And again, I have no idea whether this is going to be a successful move or whether this is just going to be a false breakout before it trades higher. So the thing is, since I do not know what will be the outcome, naturally it will be common sense to put a stop loss, right? Because a stop loss is like an insurance. In case you are wrong, it prevents further damage to your account. So this is why I always use a stop loss, and I always risk no more than 1% on my trading account. So this is my take on the Swedish krona. And let's say, for example, it really turns out to be a false breakout whereby price, traded lower and then it closes higher. Then I may or may not trade the false breakout. I would like to see the price action of how it looks like before I decide to whether to take the false breakout or not. So but that said, this is basically my plan for now in trading the Swedish krona. Okay? So that's it. Another market I want to alert you about is none other than the dollar yen. You look at the dollar yen, the weekly time frame, right? It's looking pretty good as well. If we talk about a big picture perspective again, you can see that it has been in an uptrend for quite a while. Then it entered into this period again, the potential distribution phase. It broke out, so this distribution is formed, right? So the thing about accumulation and distribution is that you never know whether it is confirmed or not. You only know that it's confirmed when price has break out of the range. So there is definitely no certainty in this kind of aspect of technical analysis, right? All you can do is just to anticipate what may potentially happen, and if it does happen, you react accordingly. Okay, so this is a dollar yen, right? Pretty much a similar theme, and right now it has broke below this area of support, and in fact, it's basically a head and shoulders pattern. If you ask me, this was the left shoulder, this is the head, the right shoulder, and this was the neckline. So if you've been following me for a while now, you know that we have talked pretty extensively on this pattern in dollar yen. So when it broke below it, got short, and after which price I think retraced back to my price, so I didn't really get a huge move out of this trade. But right now it seems to be offering another potential move, because if you look at the big picture, what does this pattern look like to you? It broke down lower and then it started to consolidate. What does this pattern look like to you? If you ask me, right, if you look at you study a little bit about classical technical analysis, you will know that this is a potential bearish flag pattern. And if price can break below the flag pattern, we could see another move lower. So here's how I look to trade it, right? On a daily time frame, you can see that price is actually, in fact, making lower highs. And this is your area of support over here. So if price can break and close below this area of support, this swing low, I'll be looking to take a short position on dollar yen and to ride the move lower. And again, same as the Swedish krona, I have no idea whether this is going to be a false breakout or whether this is going to be a legitimate move, right? It's all about probabilities. So this is why I always have a stop loss in place. I always risk 1% of my trading account because I really have no idea whether it's going to be a winning trade for me, or it's going to be a scratch trade, or is it going to be a loser. I have absolutely no idea. Okay, and another thing I want to talk about is the soybean, right? So for those of you who have watched last week's video, I talked about soybean, and here you are, my friend. There you are. So soybean, right? So soybean, I gotta admit, I made a mistake of entering prematurely, right? I went long on this close over here, you can see, and then this spike down, boom, came out, and I got stopped out. So, right, so this is my mistake. Clearly, I entered too early. So what I'm going to do again in the coming week is that if price can break and close above this black line over here, right? Why this black line? Because if you look back, this black line is basically the highest close over the last few months. So I just take the line and just extend it out. So if it can close above the black line, it shows that it's telling you that it has closed above an area which it has not been able to do so over the last, I think, 6 months or so. So the black line is a line that I'm closely watching, right? So soybean is a market that you could look at as well. It's a potential accumulation phase. And one thing I like about this wick is that it's telling you that there is a sign of strength, because why did this wick form? It's telling you that there are buyers willing to bid up at this area before price finally close up higher. So this to me is a sign of strength. So it's a good thing that I'm actually seeing this, even though I got stopped out for a loss earlier this week on soybean. Okay, so and yeah, last but not least, I want to share with you something which I find it's important, right? So one thing about trading is that you are involving financial capital. You're putting your financial capital at risk. And on top of your time learning how to trade, right? Spending time in front of the monitors, journaling down your trade, fine-tuning your trading plan, those are all time, effort, and money. But there's one aspect that is seldom talked about, is what I call mental capital. Right? This is another form of expense on your part, even though it's not financially, but it's your own mental capital. So let me explain a bit what is mental capital. So earlier in my prop days, right, when I was a prop trader, I was basically trading very actively on an intraday basis. So one thing about, if you're an intraday trader, you know that you wouldn't want to be trading during the lunch hour, right, the lull period, because the market is just simply most probably not going to go anywhere during the lunch hour because traders are away from their desk. So you can see that the price action during the lunch hour typically looks something like a very rangy market going nowhere, say something like this, right? This is how a lunch hour price action will look like. And after lunch hour, to close it, will probably make another move in either direction. So lunch hour, you know that it's a period where the market isn't really going to go anywhere. So think about this. If you are an intraday trader and you spot a setup during the lunch hour, it may be a valid setup, a setup that is according to your trading plan. But if you know that you are trading into lunch hour and you know that there's a good probability the market isn't going anywhere, then you may want to consider skipping the trade altogether. Right? It could be a winning trade, it could be a losing trade. But I think what's more important is that there will be mental capital that will be used up. Right? Because you have to sit through the entire lunch hour, watch the price action of the market that chances are is going nowhere, and you're watching up down. It's just vexing on you. You're wasting mental capital on a setup during a poor trading period. So it's better to just skip the setup altogether, maybe have a good lunch and come back when the market has a good possibility of making a move. So this is what I mean by do not waste your mental capital on setups which chances are isn't going to go anywhere for a while. Like say for example, this chart you're looking at, this is the pound Aussie, right? You can relate this to higher time frame terms, right? You notice that this market, it is not exactly the cleanest of market. It tends to, for example, you go, say it comes back to the 2050 over here, you go short and you look at the price action. On hindsight, it may look, it's a winning trade. It looks easy to trade. But you look at all the wicks, it flies up, flies down, then it bounces off the lows, Then it tried to attempt to rally up higher before it closed somewhere in the middle. The bears came in. The bears came in. The bears came in and rejected the bulls. The bears came in. Then the bulls step in. The bulls step in. And after that, you can see this amount of messy price action. It go back all the way back up near to your entry level. So this is a daily time frame. So can you imagine for how many days is this? I think almost 20 days, a month. You watch the market going nowhere. And you're basically investing mental capital in this kind of trading setup. So here's the thing. If you notice that you have a trading setup, but the market, the price action looks very choppy, like this one over here, right? It's basically, flying up and down, it basically, look at this as well. Just pretty much very choppy. No doubt the trend is down, but the quality of the trend, the choppiness of this trend, to me, isn't worth trying to, ride the trend on this. Maybe you can take a swing trade out of this, right? Just one swing in the market. But if you want to try and capture a trend on it, you are going to, invest quite a bit of mental capital on it. So it's best, find setups which are much cleaner, where the move are more, I would say, more prominent. The ebb and flow is very clean. And those are kind of setups that is easier on you mentally. You have no idea whether it's going to be a winning or losing trade, but you want to preserve your mental capital as much as possible. Okay? So I hope you get my point about talking about mental capital. This is something that I would say most new traders won't think about it, because they're always thinking about how much money I can make, right? I'll do whatever it takes to make that much money. But when you have been doing this for a while now, you realize that it's no longer just about the money. It's about, having the ability, the consistency to do it day in and day out. And the only way you can do so is to protect your mental capital. Okay? So with that, that's all I have for you in this week's market analysis. All right, I hope you find it useful. And if there's anything, don't hesitate to let me know. Right, with that, I wish you good luck and good trading. Talk to you soon.